Think of it this way. If people start getting more money in the bank or getting high salaries due to inflation, they will start to think of making big purchases, and what bigger purchase is there than cha-ching? What's up everyone, welcome back to another video with the Millennial Finance. We recently made a video about how inflation is going a bit rampant right now and how it will impact us as individuals. Well, in October, the US again had its highest inflation ever since 1990, clocking in at 6.2%. This time though, they were joined by their friendly neighbors Canada, who also had their highest inflation ever since 2003. Well, the Federal Reserve has taken some steps to try and combat this, namely that they will start to reduce the pace of asset purchases. They still think that all of this is transitory, but they expect inflation to be strong going into 2022. But enough about all of that. If you guys want to know the basics of inflation and how it will impact us, then you can watch our previous video. Today, I'll be talking about how we can structure our investment portfolios to sort of combat inflation and even in some ways hedge against it. Getting straight to it, the first thing that we can invest in during times of inflation is real estate. Think of it this way. If people start getting more money in the bank or getting high salaries due to inflation, they will start to think of making big purchases, and what bigger purchase is there than buying your first house, or if in the case of Najib, buying a 100 million ringgit house. In fact, even I am considering buying my first piece of real estate. At this point, I'm not so convinced by it yet, but I'm going to do a bit more research before I decide whether I want to take the plunge. Simple economics. When people have more money, they want to buy more stuff, bigger purchases like houses, and when more people want to buy real estate, well, the prices go up. Also, consider this from a loan or mortgage point of view. Let's say I buy a house that's worth 1 million ringgit and my repayment is around 5,000 ringgit a month. Today, that is still quite a big amount of money. As inflation is high, the value that we're paying now, which is 5,000 ringgit every month, seems a lot, but because inflation is going to devalue our currency, maybe 10-15 years down the road, 5,000 ringgit may not be that much anymore. This is actually one of the biggest reasons that people invest in real estate during inflationary times. You get to lock in the price of a house, you know real estate prices will go up because of inflation, and you just pay the small monthly payments every month. It's not like you're going to pay for everything upfront. I know, just because we say this doesn't mean that all of you or all of us is just going to simply go out and buy a piece of real estate. Who does that anyway? As usual, there is an alternative to real estate investing, and it is REITs. Just like how the value of our houses will increase in price during inflationary times, the value of properties owned by REITs will do just the same. This means that we should see some sweet capital appreciation if we invest in any of these REITs. On top of that, we of course also get the nice dividends that these investments pay out. This is not some new discovery by me. I'm not a genius. Everyone knows this, and inflation talks has been around for a while. So because of that, the real estate market or even the REIT market has already reacted to this. For example, a REIT ETF in the US called VNQ by Vanguard is already up 33% year to date, and it's still looking strong. However, as Malaysians or even Singaporeans, if you guys are watching this, I would strongly advise against buying US REITs. The reason for this is because the dividends that these REITs pay out, which is usually around, let's say, the 4 to 5% mark, will be subject to a 30% withholding tax from the US government. This means that, let's say, a REIT that we own pays 5% in dividends, we will only really get 3.5%. And this amount is deducted by the brokers before we even get the cash in our accounts. So we can always buy Malaysian REITs instead through brokers like Rakuten. We also have a video specifically talking about Malaysian REITs. It's a bit old, but you can go check it out. Some of the ones that we mentioned there are still pretty decent investments. Some people may still prefer US REITs, even despite the 30% withholding tax. If this is you, then feel free to go ahead. There's of course no harm, especially if you're thinking from a capital appreciation point of view instead of dividends, then yeah, that would make sense. Next up, commodities are also another beneficiary of inflation, and the biggest one is of course gold. People always say that they have gold in their portfolio, whether it's 5%, 10%, and they say that it is as an inflation hedge, and that is true. There isn't any real way that I can explain this like I did with the real estate portion, other than the fact that people just seem to flock to gold when they think that the fiat currency is being devalued. Honestly, this is just a demand and supply thing. People don't transact in gold nowadays unless we're saying one day we're going to go back to the gold standard of the olden times. Do note that some research has found that gold may not be such a good inflation hedge after all, so just take note of that, do your research if you want to use this asset class to combat inflation. Instead, I prefer other commodities like oil or even stuff like uranium and corn. You heard that right, corn. ETFs like XOP for oil is up a massive 82% in 2021. There's an ETF for uranium, it's called URA, it is up 95%. And the corn ETF that I was talking about, it is up 38%. All of these ETFs, as of the date that we're recording this, far outpace the performance of the S&P 500, which is currently only up about 27% year to date. Out of all three of these I mentioned, the most likely one that I would invest my money in is in the agriculture one in an ETF like DBA. Instead of just corn, they also have exposure to other critical commodities like wheat, soy, sugar, and even coffee. I'm not gonna lie, uranium sounds pretty damn cool, but I don't know how exactly it works and what we really use it for, so I'm just gonna put this in my too difficult bucket. Another option that we have is, of course, crypto. How can I go through a video talking about inflation hedge, bring up gold, and then not bring up things like Bitcoin? The way this works is very similar to gold. The price of Bitcoin could go up during inflationary times just because people lose faith due to the devaluation of their fiat currencies. If I have 1000 USD, inflation is eating away at this money, I don't want to hold 1000 USD, maybe I decide to buy Bitcoin instead. The process of Bitcoin going all the way to the moon is happening regardless of inflation or not, of course, but higher inflation could just speed up this entire process. There is a huge disclaimer in this though, in that is purely a theory and it has not been proven before. For example, people also thought that Bitcoin can be a stock hedge just like gold, meaning when stock prices go down, the price of Bitcoin or gold should go up. In March 2020, when the prices of all stocks tumbled, Bitcoin followed suit and it came down to a price of $4,000. So like I said, this is all just in theory. I'm 100% not going to buy more crypto just because I think inflation is around the corner. If you do want to load up on crypto though, then check out Luno. It's a great platform. You can buy and sell Bitcoin, Ethereum, and a few other crypto. You can use our code. We'll leave it down in the description below and you'll get some free Bitcoin once you invest your money in there. Now, I've already brought up 3 different asset classes that we can invest our money in, but you must be thinking, just because I say all of this and just because inflation is high, does it mean I stop investing in stocks? Well, the answer to that is no. I'd probably be holding almost all of my current stock investments and I don't plan to trim anything at all. When investing in stocks though, companies that have strong pricing power usually do the best during inflationary times. This means that they can increase the price of their products and people will still buy it because demand is just so high. So what I'm talking about are companies like Procter & Gamble and Walmart. These guys, they sell stuff like soap, toothpaste, groceries. Just because they increase their price doesn't mean we can say, you know what, I'm not going to eat for the next 2 months. So yeah, we will still have to buy products from P&G. We will still have to go to Walmart, or in the case of Malaysia, maybe something like Tesco, even if the prices go higher. So because they have this pricing power, these companies tend to do better because they can still maintain their high profits even though their costs are higher because they just push it back to the end customer, which is all of us. Compare this to companies whose products are a bit more discretionary. So for example, Nike. Nike sells a shoe for 300 ringgit. A lot of people want to buy it, but because of inflation, the cost of their shoes are now higher and they want to sell it at 500 ringgit. Many people would think that it's not worth it and they just won't buy those shoes anymore. So that's an example of how a discretionary company may not do so well during inflationary times versus a staple company like Procter & Gamble. Other companies or other sectors that will definitely struggle is of course growth stocks. This one will impact my portfolio a lot. It's because these guys, they currently don't make any profits. They don't distribute dividends. So because their profits are in the future, inflation sort of eats into that and lessens the value of their future profits. We can already see a lot of growth stocks from last year who did very well. This year they're taking a beating. There are still some who are at very high valuations and I will be extremely surprised if they don't take a plunge soon. Having said all of this, of course, I'm not a financial advisor, this is not financial advice, and I most likely wouldn't be trimming or selling any of my positions just because of this inflationary period. A boomer portfolio is probably perfect for times like this, but I'll be sticking to my investment thesis. Anyway, I have stuff like, for example, Amanah Saham, EPF, StashAway. All of these investments are a bit better for these times, so in my own stock portfolio, I will just maintain my current holdings. And the last choice that we have is a bit of a weird one, and it is holding cash to buy the dip. Like I said, for me, the main chunk of my portfolio will remain in stocks, and in particular, growth stocks. I'm not going to start buying companies like Procter & Gamble just because of inflation. It's not really my investing style, since I think that growth stocks are going to take a beating very soon. Maybe I think they'll drop 20, 30, even 50%. I can hold some cash right now to buy the dip when it comes. Cash is a position after all. It doesn't mean that we always have to use all our cash and be invested at all times. In certain scenarios, we do want to hold cash. This is a bit contradictory though, because inflation does eat away at the value of our cash. So if we see things ramping up too fast, we don't want to be holding too much cash at any particular time. So what I do is I try to put some of this cash into higher yielding assets that can help me at least minimize the impacts of inflation. One option is to buy inflationary linked bonds like TIPS. So these bonds are made specifically so that if inflation goes up, the value of these bonds will go up as well. Or I can always put my money in money market funds like StashAway Simple or Versa. Of course, their returns of around 2.4% will most likely not beat inflation, but at least it is better than holding it under my pillow or keeping it in my bank account with 0.3% interest rates. So yeah, those are the 5 options that you have when constructing or sort of managing your portfolio during inflationary times. Let us know down in the comments below which one is your favorite. Thanks for watching this video to the end, guys. Give us a big thumbs up if you haven't already and subscribe to our channel. See you guys in the next one. Peace out.